Welcome back for another report on the oil market. WTI's price was on the rise over the past few days and characteristically reached a new 6-week high yesterday. The commodities fundamentals seem to include worries from the coronavirus surge, especially in India, yet also in other places such as Japan, while on the flip side there seems to be also some optimism regarding the commodities demand outlook, as the vaccination process seems to intensify in areas such as Europe, the US and the UK. We plan to focus on these issues in today's report, and at the end we will be providing also technical analysis complementing the commodities fundamentals. We make a start with the most recent releases regarding the oil market, as they also tend to illuminate the situation on the ground for the commodity. In the US, the Baker Hughes oil rig count reading ticked down to 343 active oil rigs, highlighting a stabilization currently in the number of active oil rigs in the US. On Tuesday, the AP weekly crude oil inventories figure showed a considerable increase of inventories as high as 4.3 million barrels, while on the contrary, the EIA crude oil inventories figure implied that demand was in effect able to catch up with production levels, as it noted an insignificant buildup of only 90,000 barrels. Hence, overall, there seems to be a weakening of the demand side despite the EIA reading on Wednesday. As we noted before, the increase of COVID cases in India and Japan tended to create substantial worries for oil's demand side, hence tends to weigh on oil's prices, practically holding back on oil's possible rally. It's characteristic that the number of new daily cases in India continued to mark new highs yesterday, reaching almost 359.5 thousand new daily cases, the highest to date. In Japan, the number of new daily cases seems to be retreating, yet analysts tend to highlight that Japan experiences a fourth wave of the pandemic with intensified lockdown measures. So the path of the pandemic tends to remain a threat for the demand outlook of the commodity. On the other hand, though, oil's prices tell a different story, as they are on the rise since the start of the week. It seems that hopes for an improvement of the demand outlook are on the rise. The vaccination in the UK and the US is intense, and in Canada as well as Europe, the pace of vaccination is improving considerably, increasing the chances for a quicker return to some sort of normality, hence also an improvement of the demand outlook for oil. It's characteristic that the OPEC group, along with its allies such as Russia, also known as the OPEC Plus group, remained rather optimistic regarding the demand outlook of oil. The group reportedly ditched a ministerial meeting on Wednesday, sticking to its plans to ease production cuts, which was perceived as a sign of confidence on behalf of the group for the demand side of oil to rebound in the coming months. In a report by OPEC Plus experts, the group forecast for global oil demand in 2021 would grow by 6 million barrels per day after falling 9.5 million barrels per day last year. Please note that the OPEC Plus group's next ministerial meeting is scheduled for the 1st of June to discuss the July-August output levels. Hence, as long as optimism for the recovery of oil's demand side outweighs worries created for the resurgence of the pandemic, we expect fundamentals to remain rather bullish, yet it should be noted that oil's prices are already at rather high levels. Moving now to the technical analysis in WTI's 4-hour chart, WTI prices were on the rise yesterday, breaking the $63 resistance line, now turned to support, and aimed for the 66.40 resistance line. We tend to maintain a bullish outlook for the commodities price as long as it remains above the upward trend line accepted since the 26th of April. Please note that the RSI indicator below our 4-hour chart is just below the reading of 70, confirming the presence of the bulls for the commodity currently. Should the bulls maintain their control, we may see WTI's prices breaking the 66.40 resistance line, aiming for the 67.75 resistance level, while even higher, we have noted the 69.80 resistance hurdle, with the latter two levels not seeing any price action since late October 2018, highlighting how high WTI prices already are. On the other hand, should the bears take over, we may see the commodities prices breaking the 63 support line and aim for the 61.15 support level, which acted rather successfully as a support level last week, while even lower we note the 59 support barrier, which was tested multiple times from the 1st to the 9th of April. We hope that you found this report useful, and if so, please don't forget to subscribe and share. From all of us here at IronFX, best wishes for solid trading.